Hello, welcome from Trend Signal for a review of the data and events the week beginning the 14th of November and try and read through some of the tea leaves of last week's moves following the very unexpected and extraordinary victory by Donald Trump in the US election. Okay, we start the week on a positive note. Equity markets still strangely higher. I say strangely higher. The markets are very glass half full at the moment. Certainly last week, the Dow Jones, S&P, Dow Jones nudging all-time highs, S&P a smidgen away, the DAX responding very positively. Our own FTSE not reacting quite so well as sterling seems to recover quite a lot of its, certainly the flash crash on the, 7th of October, that's those losses have been recovered for now. And the big news really post-election is the initial swoon in stock markets, swoon in the dollar, and the sharp rise in gold has been followed by a complete reversal of those trades. So rather than risk off, it's very much risk on. As I said, the markets are very much in a sort of a glass half full bullish mode. And the word or a phrase that's been coined is Trumpflation, with the fiscal spending that Trump has outlined so far would suggest that it's going to be positive for the economy, not quite so positive for inflation, obviously, and that's why we've seen a significant sell-off in bonds and a real spike in yields. The yields on the Bund hitting 0.32%, which were close to zero a month ago. 10-year treasuries have hit 2.15% close of play on Friday, and on Wednesday they were as low as 1.71 before the votes were being counted. So an extraordinary move, absolutely extraordinary. The Trump victory, another sign of the rise of the populist politician, challenging the populist elite, you could say, and the status quo. However, we were told that Trump was supposed to be bad for the dollar, bad for equities, good for gold, or so we thought. It seems the market are more excited by the fiscal expansion that Trump intends to engage in rather than any worries about his trade and foreign policy. Anyway, time will tell, but it seems that the central bank's negative interest rate policies, whilst look doomed because of the consequences on the financial sector and savers, etc., are now going to be backed up by some proper fiscal expansion, which is something that a number of people have been calling for a while. Whether they wanted Trump's policies with his mixture of very risky trade and foreign policy is another matter, but certainly optimism abounds, and that's where we are heading for now, whether you agree with it or not. Let's have a look at the Forex factory calendar and the events this week. It's a reasonably busy calendar, although the ramifications of Trump's victory are still being poured over, and they will be for the next several weeks until he takes office on the 20th of January. But for this week, we have a number of key releases. It's inflation data week, certainly in the UK and the US, and we kick off our own CPI reading at 9:30 on Tuesday. It's all, or has been, a little bit benign. We missed the forecast from last month, but there's a forecast for another tick up to 1.1%. But it's noteworthy that with the recovery in sterling and a fall off in the oil price, that pressure may subside for a month or two yet. And then we have the US CPI on Thursday, the US inflation reading on Thursday. I'm expecting a slight uptick there as well to plus 0.4%. One would assume with Trump's policies, whether he gets them all through Congress or not, depends how much he gets on with Mr. Ryan in charge of Congress there. But to get all these extra spending measures in to cut taxes for businesses and taxpayers, that's going to need the permission of Congress. So that may not happen immediately, but certainly inflation is something that we'll be looking at more closely, something that we haven't really been used to for several years, really. Retail sales, we have data coming out from the US on, I think it's Wednesday, no, actually it's Tuesday, I apologize. Tuesday, 1:30, we have retail sales, a reasonably important number, plus 0.5% is the core number, excluding the more volatile components, so the core retail sales plus 0.5%. Then we have some manufacturing data out on Thursday in the Philly Fed Manufacturing Index. That's another keenly watched indicator that comes out at 1:30 on Thursday. A slight pullback from the previous data. We've got a few central bankers talking this week as well. Mario Draghi on Monday to the Italian Treasury in Rome. May not be the most important speech, but nevertheless, he also is talking at the end of the week on Friday, Mario Draghi, at the Euro Finance Week in Frankfurt, so that will carry a bit more weight. But we've also got Janet Yellen, the chairperson of the Federal Reserve, testifying about the economic outlook before the Joint Economic Committee in Washington. That is very important. That comes out at 3 o'clock on Thursday, and that is likely to move the markets. Whether Janet Yellen stays in her job for the months to come is unclear at this stage, but it certainly is now a shoo-in that the Fed will be raising rates in December, I would have thought. But also the risk is that they look to intensify their rate hiking strategy if, as it looks like that Trump's new administration, when it comes in, will be focusing on spending money. Time will tell. Those are the key elements. In fact, I think one other element I should mention also is UK unemployment, especially with what sterling has done over the last week. Very, very strong. Whilst the euro bled last week, the sterling managed to tick back up to its pre-flash crash level, as I said. Claimant count 1.9 thousand. Average earnings at 2.3%. That will attract a bit of attention. We're looking at all the sort of gauges to see how we're doing post the Brexit vote, and most of them have seemed to surprise most of the predictions post Brexit. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.